the meeting, right? So we have both we are ACCA Women's Network and we're created in 2020. Our chair is Victoria Biola Ajayi and our vice chair is Uju, Mrs. Uju. We have about 300 members right now in the network, and we are just we're women supporting each other to get better in our profession. And we have this kind of conversations to help us. We have quarterly trainings by the Career Development and Training. So my name is Ayobami Shola, and I'm the deputy lead for the Career Development and Training. And we have this trainings quarterly, majorly, just to keep our members updated on what's going on. So Abimbola, will you be willing to introduce Mrs. Bukola? Thank you.
Sure. Thank you so much, Ayobami. Sure, I will do that. Right. Good afternoon, everyone, and thank you all for joining. Our speaker today is Mrs. Bukola Akinmoladun, fondly referred to as Buki. Madam Buki
Hi, Obami. It seems she's frozen from here.
Okay, yeah, I'm back, Uju.
Yeah, it seems like Abimbola's video is frozen. Is it
Okay,
just from here?
maybe it's the network.
Oh,
Okay, I'll do an introduction of her then if Abimbola is not available.
Please
Yeah,
proceed.
so Mrs. Bukunola Akinmoladun is a fellow of ICANN and CITN with over 3 decades of experience in accounting, consulting, and tax advisory. She trained with Ernst Young and has held leadership roles across academia, manufacturing, engineering, and the oil and gas sector. A respected tax and financial accounting specialist, she has advised numerous organizations on technical and compliance matters and currently serves as the managing partner at BMO Co, chartered accountant. She's also an MBA graduate of Lagos Business School, an author and a passionate mentor dedicated to building strong businesses and developing future professionals. So we see that our facilitator today is a well-experienced person with over 3 decades of experience. So I would like everybody to clap and as we welcome her in. Thank you, Mrs. Bukunola.
Thank you very much. It's my pleasure to be in the midst of women like myself, professional women who take their careers so very seriously and passionately. Thank you, Abimbola, for inviting me. I do not take it for granted. I'm sure there are so many other women in your network that you could have called for this afternoon. You chose to call me, so I'm saying thank you to everyone. So I'd like to know first and foremost how many minutes I have for this presentation and what your style is.
You have 1 hour for the presentation, ma'am.
Okay. Thank you. Okay, so do I have the do I have the the right to share my screen?
Yes, ma'am, I've made you co-host already.
All right, thank you. Okay. So I'd like to say a big welcome to everyone on this platform. I hope you can see my screen.
Yes, I can.
Yes.
Yes, welcome.
All right. So let's go right into it. So we're looking at tax planning for indirect taxes, not indirect taxes. We all know why indirect taxes. The only way to not pay indirect tax is not to do, not to consume the service that is that has those taxes. Otherwise, you will have to pay. So what do we mean by direct tax? So we're looking at the planning and the risk management that comes with the planning. So look at direct taxes for Nigeria. In Nigeria, we have how many type of direct taxes? It's either the personal tax, the income tax generated by an entity, an organization that is directly based on the income. All right. So the Nigerian tax system, after several decades of what I would call stagnancy or slow-paced movement, took a large shift last year with the enactment of 4 laws, at the same time. That's really, really unprecedented. We've had a lot of amendments and, few changes here and there. But last year was a major blow to our tax system, such that the government decided to unify all of the taxes system and have one entity instead of multiple entities manage the revenue of the nation, called Nigeria Revenue Service. Instead of what we had before, we had Federal Revenue Services, we had the State Internal Revenue Services, we had what do you call it now? You had the customs and the excise departments, you had various arms of governments that we call NDAs that were in charge of collecting revenue for government. Now that has become a thing of the past. So we have the Nigeria Revenue Services responsible for all the government revenue related activities. Okay, and in order to have that done and seamlessly, there has to be a law backing that up. And so we had what we call the Nigerian Revenue Service Establishment Act, okay, that provided the cover that is needed for Nigerian Revenue Service. So that effectively repealed the Federal Revenue Services Establishment Act. All right. So we also have the Nigerian Tax Administration Act. So that was also done in order to unify the procedures, the tax procedures, for more consistency and efficiency. The purpose of that is to ensure that government optimizes revenue collection as well as facilitates tax compliance by all tax paying entities, whether individuals or organizations. So what do we need to know about all of these taxes, and how can we effectively do our tax planning in such a way that we do not fall foul of the law. The first thing I would say is that everyone should understand what each of the laws say. Okay, and I'm not sure we have that luxury of time on this platform to go into the details of each of those taxes, but to talk to us about the summaries of all of them. And at that point, I will have to develop the capacity to engage and understand each of them. All right, so in tax planning, what do? We want to have efficiency, and we want to minimize our exposures, because every tax decision will ultimately give us two outcomes, whether we have tax efficiency or we have exposures. But for each tax decision you take, yes, it might have efficiency in one, but you can also end up with exposure in another. So you have to manage your expectation and manage your risk as much as possible. And that's why we are here this evening. Now, so what do we call tax planning? Tax planning is a way that we arrange all our affairs to minimize tax exposure using statutory exceptions, reliefs and thresholds, within timing of income and of disposal, the proper entity classification.
Sorry, ma. Sorry to interrupt you. Can you please put the presentation in slide mode or presentation mode so that we can see the slides clearly?
Oh, okay. Let me try to do that. Sorry, when you are used to someone doing this for you. Are you still seeing it anyways?
Yeah, we're seeing it. So there's a at the lower part after notes. At the lower part, when notes, if you go to the last one before the order. Not that one, the one beside it. The third, the fourth one, 1, 2, 3, 4. Fourth one, number 4 icon. That would help.
Okay, let's see.
No, the fourth one, ma.
Yeah, absolutely. Thank you. Well, I hope somebody is there to
no, this is
me
not
with.
Okay, yes, it's fine.
Okay, so are we see now? Is it okay?
Yes, it's fine. Yes.
All right, thank you. All right. Okay, so like I was saying earlier, so we for tax planning, it's a lawful arrangement of your tax affairs in order to minimize your exposure. And what are the tools that we use for that? We have statutory tax exemptions, and we have reliefs and thresholds. And we also can use a timing of income and disposals, a proper entity classification. And whereas you can engage in tax planning that ends up with tax avoidance, you can also have it in a way that puts you on the illegal side of the law, which we call tax evasion. Tax evasion would really mean that you are understating your income or inflating your expenses, that you are not able to justify. Some entities may end up not filing or filing false figures. That will be illegal. And sometimes, in some cases, people end up having, for the first time in my life, maybe how many years ago, I had someone asking me which of the versions of the account we were going to work with. And I was taken aback because I wasn't used to that system, that people had 3, 4 versions of the accounts that they present to different stakeholders. That for me, because where I was coming from, we had only one set of accounts, and that's what we use for everyone. So I got to know later that people actually do aggressive tax planning, and that comes tax evasion. But we can avoid taxes. We can do illegally. Then the only way we can do illegally is for us to understand and plan ahead. as we go, we will understand what thresholds there are and what advantages it could be for. Of course, there are advantages and there are disadvantages to everything. And so you have to, pick your battles. Which one do you want to do? A lot of tax avoidance that exposes you or limits your ability to enter into some other businesses, or you want to do it in a way that it's a balance, it's a win-win for both all these stakeholders. So what are direct taxes? I think I earlier mentioned it. We have a company income tax, which is the taxes paid on the income of a profit-making organization. All right, we have the capital gains tax, and we also have the personal income taxes. The personal income tax is the tax paid by individuals, okay, on what they earn globally. The personal income tax is a tax that is that's originally what we call that operates by residency rule, okay? But now the law is saying wherever you earn an income, there's a tax payable in that jurisdiction. We have capital gains tax. The capital gains tax used to be 10%, and it's payable by anyone, whether a company or an individual, on the sale, on the profits made from the sale or the disposal of any asset. It could be financial assets. It could also be movable assets. Okay, but what has changed in the new law is that it's been removed from being a separate tax to being part of and parcel of an income and earned by either a company or an individual. All right, so it's no longer 10%. It's now based on your income. So it's added together as your income and taxed at the same rate as the income. You know, that has two advantages, either whatever you decide to toss the coin. Because it's coming to income tax as part of your other income, all right? It's taxed now at 30%. But then, if the company doesn't make enough profit, it means also that you might be paying less than the 10% if you have to pay 10%, you know, at any point in time. So, and for the persons as well, when you pay your taxes as an individual, it's graduated. And I think that the highest is 25%. So you get to pay your taxes based on that, you know, and it comes together as a package. It's not so you, even if you make the profit on your disposal of your assets, you do not have to pay like you would have had to pay in the past. So that's on that Company Income Tax Act. And okay, so I'll go into company income tax. So for tax planning purposes, the companies will say company income tax is 30%, all right, plus 4% development levy. And that's because instead of having the tiny taxes of 0.1%, 0.5%, and all that, now you have 4% of your net profit payable as development levy, you know, instead of the individual taxes that you had to pay. You had to pay the NSIT and what's it called now? NTDF. You had to pay education tax. You had to pay education tax was 3%. Police trust fund, communication tax, NASENI. You know, there are about 4 or 5 of them that were there in the law that people had to contend with. But now you had just 4%. But the good thing about this is if you're a small entity that you earn below 100, maximum of 100 million naira in a year, and your total asset is not exceeding 250 million naira, yes, you are exempted from paying taxes, right? At least for that year where you're within that bracket. So you don't have to pay tax. But if you move above that threshold, you definitely will have to pay the 25% and tax instead of 30%. Then others above the other threshold will pay 30% plus 4% tax. All right. So before we had what we used to call REN, WREN rule of your taxes. So that is before any of your expenses can be acceptable for deduction on taxes from tax, you would have to prove that the expenditure has been wholly, it has been reasonably, exclusively, and necessarily incurred. Now we have just two to contend with. You need to prove that that expense was wholly and exclusively incurred for the purpose of the revenue that was generated. All right. And so whenever your part of your optimization strategy, we will also want to be sure that your expenses are classified as something that is necessary, or that is wholly spent, incurred for the profit that was enjoyed in the year. All right. Part of the planning strategies could also be that you want to go into group structuring. So you have your entities into different whatever, so you don't exceed the threshold. Like I said, that also has its own implication. Depending on where you're trading from, you are operating from, oil and gas, there are some entities that you have to prove that you run into billions, right? Otherwise, they won't be able to get businesses from such sectors. So you also have to have your risk exposure threshold, like I said, between less than 100 million naira. If you don't make more than 100 million naira, of course, you don't have to fall into that category. Once you move into the billions, the laws are slightly more stringent. And then you also have some other other factors you will have to consider, because you have some other compliances as it were to cooperate to be other compliance requirements, that like the federal revenue, what's it called now? Financial Reporting Council of Nigeria. If you're an entity that you have such human, you are going into the billion threshold. So you also have some compliance requirements. So you want to look at all those ones. All right. We talked about expense disallowance. I also want to talk about the group structure. Okay, if you decide to unbundle your entity so that you can fall within the small threshold, you also have the transfer pricing rules to contend with, because you have transfer pricing when you have a group structure. All right. So you also can have mitigation measures, which will be your periodic turnover forecasting. So you know when to bring in your income and when to not bring in some expenses. So you have to also understand your internal tax framework, and your transfer pricing documentation and policies has to be in place. So I'll move quickly to the personal income tax and the capital gains tax under the new arrangement. Okay, so now the personal income tax has some thresholds that makes you tax exempt. Unfortunately, I don't know if any one of us on this call wants to live within that threshold, 800,000 naira per annum. Okay, it says when you earn below that, you are completely not paying any taxes, okay? But if you have anything above that, of course, you have the taxes to pay. You have taxes to pay, and you also, instead of the CRA that we used to have, you now have just rent allowance. The rent allowance is 20% of the rent that you pay in any year, but then you also know that it's capped to 500,000 naira. So you ask yourself, you choose your battle, which one do you want to do? Pay that amount, claim the relief, capped at 500,000 naira. I don't know whether in Nigeria, except for the very low people, you have 500,000 naira rent that you are paying. I don't know. So that's the one area we need to look at ourselves. As an independent contractor, we decide that instead of having to comply with the bogged down by the rules and the requirements for compliance on PAYE, you want to say, okay, let me just have all my employees as an independent contractor, or you want to outsource, as it were. That comes with its own responsibilities and requirements. All right. So personal income tax, we're talking about misclassification of income and a failure to aggregate your income sources, incorrect relief claims. Of course, the insurance or pension is still permitted. You're still allowed to deduct your what's it called, pension and insurance. So we were able to go deeper into that. But sometimes some income, maybe it's possible to get a relief from some income, and some income are actually exempted from taxes. So like I said earlier, when you sell your properties, there are some exemptions that you don't have to, some relief, you don't have to pay taxes, capital gains tax on some of the assets. If someone sells the property or a building that they live in, of course, it's not subjected to capital gains tax. There are situations where people decide to sell off their property or some other arrangements. In that case, you don't have to pay tax on it because, it's obvious, no sane person, unless there are serious issues, to just go and sell the property where they live in for whatever. I was actually reading a book yesterday where somebody said we had to sell his property, moved in there to become a tenant somewhere else. Those are some of the issues. That's one of the issues that people could contend with. Okay, so ordinarily you don't want to sell your house that you live in. So if you do that, and if you do, and you reinvest it, or if you sell your properties and you invest on it, you reinvest it, of course, you're not paying taxes on that. So we have to look at all the risk measures that we can have, all the risk exposures, and we see how we can mitigate them. All right. Mitigation measures, we can talk about annual health checks, annual tax health checks, centralized income reporting, payroll, and personal tax reconciliation. What do I mean by that? For people who have businesses, okay, you have other sources of income. How do you aggregate them to ensure that you have the maximum benefit, and then you can make your deduction from it before your taxes are computed? Because of course your taxes are computed based on the net taxable income that you earn, not on everything. Okay, I think I went into some of this earlier. Capital gains tax planning strategies. As I was talking about utilization of exceptions thresholds. If you sold the property not more than 150 million or less than 150 million, you sales proceeds is less than 150 million or maximum 150 million, you are not going to be paying taxes on it. If your profit also is less than 10 million naira, you're not going to be paid taxes on it. Then one-time principal residence exemption is also there. So that depends on what you've done in the past. Okay. Sorry, I hope someone is there to admit people. I keep getting this.
Yes, I'm admitting them as they come in.
Okay, because it keeps coming back to me. Okay. So, say one-time principal residence exemption, okay? And we talked about disposal timing to avoid high income years. We know that these taxes, for personal income tax, is based on is graduated. And so if your tax, if it comes within a tax band, in a particular year, you may decide not to do it and wait for when your income is really very low. Right? Because if your income is very high in 1 year and you see add all those ones to it, then you might be setting yourself up for a higher tax band in that particular year or under discussion. All right. So what are the risks that we can look at? Income aggregation, pushing taxpayer into higher personal income tax band. Maybe you needed to do something and then you felt, okay, I need to sell my property without thinking, you just go ahead and do it. So you have to manage your timing and you manage your expectations at that level. Incorrect assumption of retirement exceptions. Okay, so how do we mitigate that? How do we do that? So we do what we call pre-disposal tax modeling. That is one thing that you may not be able to do by yourself. And when they said, oh, yes, everybody will be able to do things themselves. Yes, government is trying to make sure that it's easier for you to file your taxes, to be compliant. You have to understand the technicalities involved. And that's why I will say to you, you probably might need a consultant that knows his or her onion to help you put that one in check so that you don't shoot yourself in the foot. Because once the money comes in, what more can you do? Okay. So if you also don't document your acquisition and improvement costs, because of course there are areas where you can reduce your taxes, okay? Because there are allowable deductions when you come to when it comes to disposal before you come about the gains that you're going to be paying. But if it's not properly documented, then you might be setting yourself up for higher tax to be paid. So we talked about pre-disposal tax modeling. That's why if you have the capacity, of course, you can do that. Just a lot of those facilities are out there for you to know how to get into them. So you can also have your asset register and valuation records. How you need to prove that this particular asset was bought at a particular price and all that might be an issue we all have to contend with. Yes, the government is trying to make compliance very easy for us and cheaper. But if we have not done our homework in the past, by documenting all our purchases, all our acquisitions, and or even registering them. That might be a bit difficult because oftentimes the government is quick to apply what we call the rules of the thumb, what we call best of judgment. They just assume your price for you, or they use the market price even when you did not make that much profit. So documentation is very key in mitigating against the undue tax liabilities. All right. So we also look at the board level approval for major disposals. If you need to, for entities, well, for entity disposal, you can't just wake up and say, oh, I am disposing this asset, because people just wake up and say, oh, it's cheaper for me to operate under a lease and buy arrangement than for me to keep some assets. So this is decide to sell those assets. Before you can do that, you need to have a board level approval with justification why you need to sell the asset, why you need to take that decision on the disposal of assets. So, like I said at the initial stage, the Nigerian Tax Act actually rewards intentionality, okay, and helps you to be very compliant, reduce the penalties. But the penalty now has become really, really aggressive, and the best way to ensure that you mitigate those is also to ensure that you're not just paying taxes. It's not just about compliance. It's about what's fair, what needs to be done. Okay, it's paying the right tax at the right time, and while you minimize your risk. If you don't understand what the tax law says, you definitely may have problems, even while you're trying to, you're saying, oh, well, it's good, they say we should comply. We will comply, but then if you don't comply the right way, the penalties have become more stringent. And it's worse now because whenever you have automation, you'd also understand that the level to which you can plead might be reduced, even if the officers would have ordinarily helped you. Their hands are equally tight because it's now automated, it's not human beings. In those days, if you needed your tax line certificate, you have to know somebody who knows somebody who knows somebody who can give you some waivers and all that. But now, once you have filed your returns every year, by the beginning of the year, your tax line certificate is there for you to ask. So the years where we had to queue and beg and do all whatnots has gone. Now, once you have filed your returns as you should, well, if you don't have any outstanding liability or returns to be filed, I mean, you don't have to worry about anything. Your tax line certificate will be there for you by the beginning of the year. You just need to click the button and then voila, you have your tax clearance certificate, whether for individuals. And by the way, a lot of state governments are also adopting this. And so a lot of automation is ongoing, digitization process ongoing. I'd like to also chip in that one of the major steps, I didn't put that one here, one of the major steps the government is introducing is the e-invoicing. With the e-invoicing, it's easier for you to get your input VAT and claims without having to argue too much because you have complied. On that note, I'd like to pause and wait for questions or comments as it may be. Thank you very much.
Thank you very much, Mrs. Akinmoladun. We appreciate this very interesting session. And I myself have learned a lot from what you've discussed with us. And you also broke down the company income tax that is 30% and 4% for development levy, which used to be like a lot of different percentages before. So it will reduce the burden on organizations. And I said that we can also have employees as independent contractor to minimize tax exposure for organizations instead of paying pay with all those ranks with your employee. I think if you have them as independent contractor, it might be like withholding tax or something that's supposed to be charged on
5% here.
so 5%. And yes, so I took some of the notes, but I would leave the room open. Please, if you have any questions concerning these discussions, please, you can ask the question. You can raise your hand, so call you, or you could drop it in the chat box, anyone you want. And if you have any contribution also, you can raise your hand or drop in the chat box. But may I have a question? How do we, this 500,000 that I said is exempt, the rent relief or something, or 20% of rent, how can organization manage that when preparing their payroll? Do they need, and you said that documentation is very key when you're talking to mitigate undue taxes. Do they need to ask their employees that, can you bring your rent receipts, or how can, is it HR or finance people in organization, how can they manage this 500,000 exemption or 20% for rent?
Yeah, you have to prove that that has happened. Even for your sorry, I think one other area where you can also reduce taxes for, especially for employees, is to encourage them to take on personal pension, additional personal pension scheme. We have the one that is compulsory. You have another one that's you can, by choice, you can do that. You save your money, at the same time you have tax exemption for that. That reduces, but you have to have a proof that that has happened.
Okay.
So it's better for the what's it called, for the employee to submit their tax, their rents, to be able to get that. If you don't, while I would encourage that the HR people, whoever is responsible for your payroll management, will ensure that every employee submits their rent receipts to benefit from that. Because if by the time the government is coming for their audit, such employee already has left the organization, you might be required to pay additional tax on behalf of such employee if you don't have all those proofs in your hand. Does that answer your question? Yeah, thank you.
It does. Thank you. Uju, please, you can ask your question. Then Chinyere will go next.
All right, thank you, moderator. Good evening, ma, and thank you for taking time to feed us with tax knowledge and allowing us to learn from your wide experience. I like the fact that you adopted a practical note to this whole conversation. Coming to the suggestion, one of the ways we can reduce taxes for employees, there is a recommendation to consider maybe converting some of them to independent contractor. Could you please walk us through how to operationalize that? So let's say someone is currently an employee and then you want to then turn them, for tax planning sake, turn them to independent contractors. From your experience, could you share how best to do that? Because I imagine that might have some some considerations and some issues. So what are the kind of things, how is the best approach to do that? And how do we, as finance people, even manage the entire process to make sure there are no sticky toes on it? And then what other taxes? I imagine that if they become professionals providing independent services, VAT would apply. Would they need to submit invoices? What sort of things should we do as finance professionals to make sure that that is properly managed? So that's my question. Then the second one is around the rent. So because I see that employees are beginning to submit rent receipts. So how do we, is it our business really? Let me say, is it our business to because it's possible the husband is submitting invoice and receipt, the same receipt somewhere, the wife is also submitting the same receipt. It's even possible somebody staying with parents is submitting. So is it really our business to verify whether that person submitting it is the person paying, or is, I don't know. But I just want us to be clear from the finance standpoint. Is there anything, do we need to go beyond just having a receipt in our records? Would the tax people raise further questions? Thank you. Those are my 2 questions. Thank you.
All right. Interesting, very interesting questions indeed. Well, for me, I would think that you are not in a position as an employer to determine whether A should have it or B should have it, okay? I'll say that once someone is able to prove that he or she has paid rent, okay, you give that allowance. Don't forget that the reason that government is actually giving this is just to also ensure that everybody is captured in the net. Okay, the interest, I'm sorry, it looks somehow, but then it's the interest is not for you. The interest is actually to get into other source of revenue. Okay, by most people. A lot of people have their properties in Nigeria. They live abroad. They earn income that is from rent. All right. So once the government is able to have that, they will give it to you. It's just a way of paying you for giving them information. If you understand that. So as the HR or finance people, once they have submitted it, you give them that allowance. All right. It's left for government to go and prove that they didn't pay that. I think the other question you were asking around having
employees to independent contractors. Yes.
Yeah, that has its own flips, and so tax planning is not one size fits all. It's not one. We have to look at all the scenario for individuals. Of course, we talked about VAT. Of course, there are rules around VAT as well. If you fall below that threshold, if you are dealing with an organization whose threshold falls below the required threshold, that organization cannot collect VAT on behalf of government. Okay, so such a person will probably not be able, if you are the only one customer that you have. I mean that employee has is you. All right, so you already know the total income of that. That person cannot charge you VAT, but then you have to self-charge because it's giving you service. The good thing about that is that that same VAT can be deducted from your, unlike before, you cannot claim input VAT on services, but now you can claim input VAT. Let's assume such a person charges you, but the person cannot charge you. Once it gives you an invoice, it's expected that based on that invoice, you will charge yourself VAT, pay it to government, and then also request the same thing, take it away from your output VAT. You net off from your output VAT. What else? Well, other than that, you also look at the other requirements for such an employee. How many of those would that be? Of course, it's a possibility, but you have to sit down really and do all the cost-benefit analysis before you go into it. I hope that's clear.
Exactly, Claire. Thank you very much. But when you were speaking, something came up that I wanted you to clear. I appreciate if you could clear. We are seeing instances where companies are beginning to even have excess input VAT with this VAT claim that is now possible, particularly for businesses that are servicing companies that take VAT as source. So now the output VAT are all taken as source because your clients are those oil and gas, financial services, telcos, government, and now it's even difficult to even have to actually claim the input VAT. So with the new tax law and now that it's operational, could you share if you have experience on how to quickly claim those rates? Because at the end of the day, it's still impacting the cash flow. So the problem hasn't been solved. So I would appreciate if you could share ways we can quickly claim the input VAT without having to go through strenuous audits that last forever. Thank you. And that's my final question.
You are taking over from everyone, but it's okay. For now, it's just started, right? I won't say there's anyone who's made such claims for now. I mean, we're just in February, all right? And you cannot be claiming input VAT for last year. You can't. The law is not retroactive. It is present. Okay, so whatever you're going to be claiming will be from this year. Okay, so you have the records there, and that's the essence of this e-invoice that we're talking about. Under the e-invoice regime, I do not expect that it will be so difficult because everything will be clear. You just have to, I mean, you really don't have anything to prove because it is already there in the government, and the government is promised that they will be doing tax refund seamlessly. We can only agree, we can only assume that we can take government by its word. And I think, in my opinion, this government is a listening government. Once people talk, they also go back to the drawing board and they make corrections where they should, so far that I have seen.
Thank you, ma'am. Chinyere, do you have any question?
Yeah, okay, thank you, Ayobami. Okay, thank you so much, Ma, for a very insightful session. I think some of the concerns I have, Uju has touched on it, and the big part is really the input VAT claims, and because of the impact on cash flows, just clarity on the refund turnaround time, because it can be significant, the new laws around everything around dealing with non-resident suppliers, and then the input VAT, the withholding deductions, and all of that. So the input VAT that's really supposed to be in and out, is there any thought around having a tax ruling? So if you have customers that are financial institutions, oil and gas, like Uju has explained, who will ultimately, you have that net off to do between the input and output. Why do we have to keep, having to go through these reconciliations on and on? I think maybe that's the first question. The second one is how does the e-invoicing process reduce the turnaround time, for the reconciliations and the refunds? Just some clarity around it. Just some clarity around that would help. Thank you.
Thank you very much. I think we would understand here that, number one, I'm a tax practitioner, tax consultant. I'm not a tax regulator. And so all these questions that we all have, we are putting them together and we're taking it back to government. And of course, if there are areas where we need to push back, we will gladly do that. Okay. And the good thing about it is that this was spearheaded, is still being spearheaded by someone like me, a practitioner like me, and with the input from all of us. All right. And the trade sectors also having their own input. Putting that aside, I know that once the e-invoicing starts, okay, it's almost like, I don't know if you've noticed that when you are filing your returns, okay, and you put in your output VAT there, and you click there that it's been taken as source, all right? When your client who has taken it as source also filed their returns and is paid, it nets it off. You don't have to see that. It doesn't say you are owing anymore, all right? So in the same way, it's like we are having what we call a blockchain, regime, such that it will not stop. You already know that this person is coming to have this. So I think we'll even get to the point where you don't even have to ask before they refund you, all right? And I think, in my own opinion, this is still better than where we had inputs paid you have the case of an oil and gas company or oil servicing company whose output VAT has been deducted at source, and then he also has to pay to vendors, right? And then you pay your vendors, but then you also have to you cannot deduct anything anymore. Government still expects you to first pay back the input VAT that you have paid your vendor, that you're supposed to have paid your vendor, but you have taken as source. I don't know if I'm communicating, and you say, oh, then after that you now claim refund. That is definitely not a very good thing. But with this regime, once it works, we're seeing how it will work. But once we allow it work, I'm sure we wouldn't have to be going through all the series of reconciliations and all that before you can include VAT. Of course, I feel you. I mean, I've had to do tax refund on behalf of my client before, and I know how long it took us. We eventually got it, but then it wasn't a very easy thing to do. But with the invoicing and information, the data all around, I'm sure it's going to be a lot easier.
Thank you very much.
Doris put in a comment here. Some employees are scared of dropping their proof of payment because they believe that more information about their landlord will later be demanded, and government going after their landlord for tax, which at the end of the day might increase their rent the more.
Well, if the landlord increases the rent the more, the tax also will be collected more. So it keeps going around in circles. So even if you don't, I'm sure the landlord doesn't have you as the only tenant, right? So you want to be sure, you want to weigh your options. 500,000 naira off your tax, it won't be 500,000 naira. Of course, the effect of the 500,000 naira, you might say, oh, it's negligible. It's not worth me going through the stress of reporting, so I just leave it. I think for us, I'm not sure anybody, I think what we've done for our employees is give to them. For some, don't deduct it. For me, I stay in my personal house, so I don't have to claim any 500,000 naira anything anywhere. Okay, but if you do, and you think that 500,000 naira is significant enough for you, by all means, drop it. If you don't drop it, some other people will drop it, and your landlord will still be in the tax net.
Thank you, ma. Please, would you say you have a live case study to share? Can you please share? If you have questions, please raise your hand or drop in the chat. Thank you.
I had to seek for extra permission because I promised that was the last question. Thank you for giving me the opportunity to share. Okay, so this case is about a non-resident company that's already profiled on NIRS portal. So this non-resident company has 10, right? And this non-resident company supplied services, mostly an IT service, right? And this non-resident company charged VAT. Now, I am the reseller of that IT software, and the end user of that software is an oil and gas company that takes VAT at source. Now, because the non-resident company have charged me VAT, a Nigerian company, I am deducting it so that I can then remit myself. But now I know that the oil and gas company would also take that same VAT from me. So are you telling me to still go and give the NIRS that VAT that I have withheld when I know that Chevron, the oil and gas, is going to still take VAT on my output? And then I'll now be waiting for everlasting opportunity to claim my input VAT. And my cash is suffering. And I have to go borrow to run my business. So if you were in my shoe, what would you do? Thank you.
Well, what would I do if I were in your shoes? Whether it is what do you call it? Whether it is the supplier that you're talking about is an NRS is inconsequential. As long as it is your vendor that you charge, I mean, for you, because of the industry you are required to deduct VAT as source, okay, and pay the net to government. If it's been taken as source, you can take them as adjustment. That's what I would do, and that's what people actually do. And I think that's part of the reasons that we are having this whole discussion about cash flow, which is the reason that government is saying, okay, let's do this e-invoicing so that people don't put up spurious claims on VAT. So whether it's a non-resident entity or it's a resident entity that has charged you VAT, you are required to deduct at source and deduct it from whatever. And incidentally, your own client also has deducted at source. So you file your returns and put it there that there are deductions that you have made. But because it's also an input VAT, but before now, input VAT, I mean, VAT on services were not even recoverable. I hope you know that.
Yeah, I do. But the reason why I had to let you know that it's a non-resident is because the e-invoicing regime doesn't cover the non-resident. Because you remember, it keeps saying the e-invoice is going to make everything easy. Well, in this instance, the invoicing doesn't even affect the non-resident company where the input is coming from. So ordinarily, my company shouldn't even take withhold VAT at source. That this is a non-resident, you could have just, if it was a local company, could have just paid that VAT.
No. Non-resident companies are not exempted from. They are not required. They are required to charge you VAT, but they can't collect it. They are meant to. And then non-resident company that has a significant economic presence in Nigeria are required to now file returns and pay their VAT.
Yes, so I'm just trying to clarify that in my case, it's because it's a non-resident. That's why I'm taking. Ordinarily, I don't take VAT as source. I was just trying to clarify.
You don't?
Yes. Because I'm not qualified. I'm not I'm oil and gas. Or
okay, you're not in the oil and gas industry.
No, I'm not. I'm just a reseller. Yes.
Okay.
Yes.
That I understand. That's fair. Well, the non-resident company, if it has become, if Nigeria has significant economic presence in Nigeria, that's the world. If it makes money habitually from Nigeria, then you don't have to deduct it as source. So you might have to pay on their behalf.
Okay, thank you.
But then for last year, you cannot claim it. I hope you know.
So if it was last year, you would have, okay. Last year, the thing we are talking about right
last year,
is the cash. As of last year, what you would have done is if it's still a non-resident, as of last year, they were not actually charging. What you would have still done is to do your self-charge, pay it, and then still wait for the oil and gas to also remit, and then you wait forever. Okay, you won't even recover it. You would have expensed it to your cost of
That's
sale.
what I'm saying. You can't recover.
Yes.
Yeah, because it's a service. You can't recover.
Yes. But in this case now.
But then if I were you, if I were
Yes.
you, that wasn't a service. That was a product for me. You're selling what is it called?
A software.
A software. That's a product. Yes. That's not service. That's different. So it depends on how you are able to prove your case with the NRS.
Okay.
Thank you. I should send you my invoice.
Thank you.
Thank you. Right. Please, do you have any question? Any question? Please ask now. Abimbola, do you have any comments?
I can't have any comments. I mean, not to say the obvious, but I mean, the obvious, so I don't need to say.
Okay, it's fine.
What's the obvious? So
the obvious is that it doesn't concern us for now.
Oh, okay.
But you might start a business in Nigeria.
You to have an understanding.
Yes, I'm enjoying the knowledge. I'm getting so much, but I'm just smiling that the only thing is that all I can see is which is expected is that there seems to be so many parallels between what is happening here in the UK versus Nigeria. The one thing that I see that's not happening yet in Nigeria is that UK is now transiting to quarterly returns. So, and that
That's
is
good.
unnecessary administrative work, if you ask me. But it's more work for accountants here, and it's also going to cost business more to do quarterly returns. So I'm thinking in my head that with the way things are going in Nigeria, probably that'll be the next bus stop, quarterly returns. I don't know. I'm just thinking. But thank you so much, Madam Buki.
My pleasure. Anytime.
Thank you, ma'am.
Okay.
So there's a comment here from Uju. She said, I thought it's 20% capped on 500K for rent relief. That's 100K relief.
No. It says, okay, yeah. The maximum you can get is 500,000 naira. It's 20% of your rent.
Okay. Thank
You
you.
understand?
Okay.
It's 20% of your rent. So if your rent is 500,000 naira, you get 100,000 naira. So if your rent is 2 million naira, it's what's 20% of 2 million? That's 400. So if you now pay rent of 5 million naira, you know that the only thing you get is 500,000 naira.
Okay, thank you, ma'am. That's clear.
You're welcome.
We also have our
Okay.
FCTI council member on the call, Nandila. Thank you for joining. She's a member of the FCTI Global Council. Do you have any word for Facilitator, Nandila?
Thank you so much. Apologies. I'm in an environment where I cannot turn on my video. Can you hear me?
Yes, I can hear you loud and clear.
Okay, all right. Thank you so much to the facilitator. This was really eye-opening. There's so much that we need to learn from the tax laws that have been introduced. And this was highly insightful. We really appreciate the time that you've taken to come and share your time with us and to educate us on the various aspects of the taxation issues. Most of us are still waddling, trying to find our way with the implementation of the new tax law. So with this session that you've had with us today, it helps us to gain the knowledge that we need to move ahead, even as we support the various organizations and ensuring that we adhere to the tax laws and timely submission of tax returns and remittances. So to the ACCA Women Network, please continue with these sessions and be encouraged that a lot of us are actually learning. I, for one, am still learning about the tax laws. I've even had to appoint a focal person in the office to be the tax focal person so that she can just summarize all the new aspects of the tax law that we really need to learn and also integrate into our processes and procedures. So the other time I just found myself like, okay, how do I obtain a TPI? And the banks are following up, and you also need this, and ensuring that everybody else has the TPI in. So the rental aspect is actually something that has really been confusing for many of our colleagues, even in the office, because most of them do not have rental agreements or they have their own houses. So this clarity that has been provided really brings more light and helps us to move forward and also guide other members of the team on what needs to be done. So thank you so much. Let me not spell the wrong name, right? Thank you.
All right.
All right. Thank you so much.
All right. Thank you.
Thank you so much, Nandila. Thank you. Sorry for putting you on the spot. Do we have any question, comments before we wrap up this session? Question, comments? Uju, please prepare for vote of thanks. You managed the session well. You asked the most questions, so you are giving us vote of thanks. And Uju is also our deputy chairperson for the ACCA Women's Network. So Uju, please, in absence of any other question, please can you give a vote of thanks?
Please, I have one clarification, please.
Okay, please.
Good evening. My name is Omolabake. It's still on that rent relief. Firstly, I thought that the maximum anyone can get on the rent relief is 100,000. Whether your rent is 2 million, 5 million, it is capped at 500,000, and it is 20% of that 500,000, meaning that there's nobody that can get more than 100,000 rent relief. I want to get some clarification on that, because that's what I thought I understand by that part of the.
No, let's always think before we interpret any law. Let's also understand the intent of the law. Okay, that makes it easier for us. The idea is not to take away all our money. The idea is to say, look, we need information from you, okay, and we need to encourage you. So government did not say the highest you can get, or your rent is 500,000 naira. Of course, anywhere in Nigeria, I don't know how many people rent houses for 500,000 in a year. It only says that the maximum relief you can get is 500,000 naira. Okay, it's 5%, 20% of your rent, all right, capped at 500,000 naira. It is the allowance that is capped, not the rent. I hope I'm clear.
Omolabake, please, do you understand?
It is not the rent that is capped, it is the relief that is capped at 500,000 naira.
Okay. She's not stalking, so maybe she understands better now.
Okay.
Okay. Thank you, everyone.
Omolabake, thank you for actually speaking, because I was seeing my name everywhere and I was even getting scared when I've been hacked. So I now realized that it was the link I shared in the group that many people joined directly, because we're trying to make it easy for them to join. So when they join with that link, it will still show my name.
Okay.
You need to wonder
But
that
it's showing FCTI Women Network.
So I joined via the FCTI Women's Network, but all the other Jews that you're seeing is not me.
Oh,
so
okay.
like those questions are not mine, because I was wondering like when, how. So now that she spoke, I realized that it was actually the link I dropped in the group that people joined via, and that's why it reflects my name. So you could see that my names are like in 3 or 4 places. So, okay, thank you, Omolabake, for actually clearing my doubt, because I was really getting worried. Okay. Now, Queen Nandi have kind of done justice to the job that Ayobami is asking me to do. She has expressed the thanks as a global council member of ACCA. It means that ACCA Global is aware that you are impacting ACCA Women's Network. So, ladies, let's say thank you very much to our exceptional moderator for the job well done. We really understand what it means for a woman to take out 2 hours, almost 2 hours of her time on a Saturday evening to impact us in this manner. We really do appreciate you, Ma. And we know you must have also taken time to even prepare for us. So we say thank you very much for feeding us with knowledge, with wisdom, and imparting us at no cost. And I believe that you are open for consultation. So Ayobami, you'll be good if you could share in the group her contact details, so that if any one of us want to take this further, we can reach out to her to ask personalized questions and get clarity. When it comes to tax matters, it might be difficult to just get generic advice. So it will be good to reach out, and I believe you will give us CWNN discount when we reach out to you for consultation and advisory. And I also would say thank you to the career development team for making this happen. We do appreciate the work that you do. Do enjoy the rest of your evening, ladies, and any gentleman in our midst. Because I see Kennedy Andrew, I suspect is a man. So any man in
I was going to. Yes.
we recognize
Thank you very much. Yes.
Yes.
Let me quickly. Sorry, I was waiting for you to finish speaking before.
Yes, over
when
to
I
you,
saw
Ma.
Andrew.
Yes.
Yeah. Okay, so Andrew Kennedy is my colleague at the office and responsible for my slides every time I go out for presentation. And that's why I complained earlier that, he's not here for me to, otherwise to help me with the slideshow. Ordinarily, once he's there, but I didn't see him on time actually, so I didn't know he was on the call. We go out together whenever I have a presentation. So thank you, Kennedy, for doing a great job, for making it out in good time for me to use this afternoon. Thank you.
Thank you,
Thank
ma'am.
you.
Very much. We appreciate your presence. So we'll be in touch to get your contact so that we can share with the group. And hopefully you give us a discount, as our deputy chair already asked on our behalf.
Not a problem. Thank you very much. My pleasure. So please enjoy the rest of your evening.
You too, ma'am. Thank you, ma'am.
Bye.
Bye.